The epidemic of the coronavirus and its impact in your investments. That's the topic for today's episode. And without further ado, let's dive in. Hello, everyone, and welcome back to another episode. For those who are tuning in for the first time, this is your channel for real estate education. So today I decided to talk about the coronavirus, right? It's all over the place, and I figure it's important to help everyone understand the impact of it. So for the most part, at least at the beginning, when people tend to hear about the coronavirus, most of us tend to think this is just a health issue, right? That is impacting the world. However, I'm here to tell you that it's a lot more than that. It's gone beyond the health issue part of it, but now it has economic repercussions that is impacting pretty much everybody all over the world. And today what we're going to do, we're going to dive into my screen to do a full-blown analysis to demonstrate you the impact of it and how you can actually adjust your investment portfolio in general so that you can minimize the negative impact of this powerful virus. And without further ado, let's just dive into my screen. Okay, and here we are inside my computer, and what we're going to do, we're going to analyze a series of articles. We're going to look at some charts and try to understand the overall picture and how that impacts the economy, how that impacts our investment, whether it's stock related or real estate investment related, and then what you can do to adjust. So we have the very first article right here that talks about the Dow Jones sinking 2,000 points back on a Monday, March 9th, right? So for those who are hearing about the Dow Jones for the first time, it's basically a index in the stock market, and that dropped over 2,000 points on Monday due to the fear of the coronavirus. So as we look at the article right here in my screen in the paper, you can read right on the headline, Dow sinks 2,000 points and worst day since 2008. S&P drops more than 7%, right? And then as you scroll down, you can get the full-blown story as to what exactly is causing it. And it's basically the fears. Investors are fearing the coronavirus. Investors are fearing an economic downturn due to the impact of the virus. People are getting sick, chaos is happening, people are giving in to their emotions, in this case, fear. And what do? They want to sell up. And if they see everyone else selling off the stocks, they want to go ahead and sell up as well in fear that, hey, if I don't sell today, I might wind up losing everything. So at least if I sell now, even though I'm losing something, at least I can salvage or save some of my investments and have something with me in case of an emergency. Same thing with bank accounts. People tend to want to liquidate everything. An example of it is what happened back in Greece over a decade ago, back in 2008, where people fear the worst and they sell off, they liquidate everything. So they want to basically hoard their cash with them, right? And as we move along the articles, you can see right here that what they needed to apply is what they call circuit breakers. And circuit breakers were actually put in place on, I think it was, October 19 is what I see here in the article. October 19, 1987, to prevent a market crash due to panic sell-offs, right? People, once again, get into a panic sell-off and they just want to sell all their securities. And what happens when they do that? The economy can crash because no one is investing, no one is feeling confident about the economy, and they had to take these measures in order to prevent a crash. So right around, I think it was 9 a.m. or something. So we have a table right here. This is a chart for the Dow Jones Industrial Average, as you can see here. And I actually filtered this out for March 9th, right? So you have a March 9th right here, and you see right around 9:30 a.m. on March 9, there is a dramatic drop from, I see, 25,938 points all the way down to what I see here, 24,026 points, right? And you can see here, there is a blank right here. You don't see any bars, any colors, or anything like that, because what happens is that the circuit breakers were put in place to prevent this point from going further down, right? So they put a stop to all trading activity. And as you can see, 15 minutes later, activities resume, and this helped prevent another market crash today, right? So as if that wasn't enough, the trading was temporarily halted on Monday, right? That's another fancy word for stopped, right? And then immediately after, the oil stocks also fear, and it just collapsed. It erased 5 trillion from the US stock market. So if you're curious about reading these articles, don't worry, there's no need for you to get out of this video. I'm going to make sure I add the links in the description box down below, but in the meantime, stick with me so you can get the most out of this video and understand holistically how better said, everything is connected, and how one thing can actually impact the other, but the impact doesn't necessarily have to be something negative or positive, right? So to continue with the story, this happened, right? The stock market crashed, the oil prices dropped, and if that wasn't enough, the Federal Reserve Bank also announced that they were going to cut interest rates, right? As you can see here in the highlighted text. So 2 things could happen. Some people can get good news out of it and see, hey, well, this is the best time for me to refinance. This is the best time for me to get a new mortgage, right? Because I'm getting low interest rate. But some other people might interpret this as a sign of the economic weakening. Hey, the Fed is not trusting the economy. And for those who don't understand what the role of the Fed is in our economy, so the Fed is here to do 2 things, right? It's what they call the dual mandate. One is to ensure maximum employment, and second is to basically maintain stable interest rates in the long term, right? This is the reason why you always hear investors waiting for the news coming out of the Fed. What is it that they determine? What is it that they do? So a couple of times a year, a special committee meets up, and that's the FOMC. And FOMC stands for the Federal Open Market Committee. And what they do is that every time they get together, they basically analyze the economy, see what's going on around the world, what's happening in the US, what happens with trading, pretty much anything that makes up the economic landscape. And after they analyze the whole picture, they make a decision, right? So, hey, we are choosing to maintain the interest rates the same. We are choosing to lower them. We're choosing to increase them. This time around, they chose to decrease them. And mainly it was because of the coronavirus. It's not mainly because they're not trusting the economy, but they clearly understand, in this case, Jay Powell understands that, hey, this virus has the potential to wipe out the economy, and we have to take measures. We have to take preventative measures to make sure that we have everything under control and that we are helping the economy. And if that wasn't enough to add to the fear, right? The Fed also announced that they're going to add $15 billion to its overnight lending on Monday, which it can be open to interpretations. A lot of people may say, hey, well, if the Fed is pumping money into the economy and they're lowering interest rates, then, hey, this is a potential for, another economic downturn. We're heading into a recession, and it doesn't have to take on that negative turn. The reason why they're doing this is because they're taking, once again, preventative measure against the coronavirus. And like I said, I get a lot of messages from people asking me, hey, do you think this is a good time to invest? Do you think I should wait a little longer? I am here to let you know that every day is a good time to invest. It's all a matter of education. You have to educate yourself to understand what's going on and to take the right measures so that, 1, you protect your investments, and then 2, at the same time, you can, just adjust yourself to that change, right? So in this case, while most people are fearing, right, and they want to pull their money out, those investors who are very well educated, what they do is that they go in and they buy, right? Buy low, sell high, right? Same thing applies for the mortgages. People are thinking, hey, well, this is not a good time because things are going back. The banks right now are super duper overwhelmed with the amount of refinance applications that they're receiving because a lot of people are trying trying to refinance their mortgage into a lower rate. So let's say, for example, if you had a mortgage at, I don't know, 5%, right? Originally a couple of years ago, and now you have the opportunity, assuming you have a great credit, to refinance into a much lower rate because of the announcement that the Fed did. And now you have the chance to get a mortgage at, let's say, I'm just making a number, 4.25. That's actually a great deal, right? Assuming you still have a lot of money owned in your mortgage. If you're about to pay it off and you owe very little money in your mortgage, then it wouldn't make sense for you to refinance. Why? Because you have to take into consideration appraisal fees, you have to take into consideration any closing costs, and then when you add those two together, or any legal fees in general, when you add all of that together, if it exceeds the benefits that you're getting out of the refinance, then it will probably not be the best option for you, right? But for those who, let's say you bought a house not too long ago at $250,000, and fast forward a couple of years, you still owe, I don't know, $210,000, then this might be the best time for you to refinance, right? Because you can get a lower rate, you can save on interest rates, and at the same time, I know a lot of people are going to wonder, well, if we're hitting a recession, then that means the properties are not appreciating that much. And once again, let's just take a step back. It all depends on the economy and all depends on the strategy that you're choosing to follow. In this case, if you are buying a whole, and for those who don't know what buying a whole means just buying your properties and holding them out for a long time, and you're keeping them solely with the purpose of cash flowing. So if you're buying and whole, this is the perfect timing for you to invest in real estate. Why? Because prices are not going off the roof. This is a good timing for you to come in and buy in at a good pricing, have the ability to finance a mortgage and get access to funding at a low rate. This is perfect for you, right? And that just simply goes to say that investments are not a short-term thing. Investments are actually a long-term thing. And if you don't believe me, let me just go back and show you a historical chart of the stock market. So you have the Dow Jones here, right? And you can see what really happened on March 9th. This is a one-day chart. This is all the activity that you can see, right? And some people may get focused just in this one picture right here, right? Oh my God, like I have this trading that opened up at like 9 something, and then all of a sudden it dropped all the way down 2,000 points, right? This is horrible. The economy is going down, and then the oil prices are dropping, and then the Fed, it's lowering its interest rates. This is horrible. But again, investing, it's a long-term thing. It's not just about the stock market. It's not just about real estate. Yeah, I know there are intraday traders. I'm very familiar with that. But overall, you should have something else to complement your investment. You shouldn't live solely on your investment. This is just something that's going to guarantee a better financial future, but it's not something that's going to happen overnight. We all, as investors, whether you're a real estate investor, whether you're a stock market investor, everything has its fluctuations. The market always has its corrections, and it will always be an up and down, right? But if you hold everything long enough, if you understand that real estate or anything that you invest in is actually a long-term thing, then you will see what truly happens to the price in the long term. So let's just look at here. I'm going to click on Max, which is going to show you a view of the historical prices long term. So you have the Dow Jones here, and you have we're talking February 25th 1985, right? Look at where the Dow Jones is. We're talking 1,289 points, and then over time you see the curve goes upwards. Even though there are market corrections here and there, you see a drop here and there, and then you see nothing is a straight line upwards. You will always see fluctuations up and down, but as long as the overall lane, as all as the overall trend, it's going upwards, then that's all that cares, because once again, it's a long-term thing, right? So for those who are interested about understanding how long-term investment works, you can definitely, I invite you to read The Intelligent Investor. And if you're curious, I'm going to make sure I leave the link down below in the description box for you to take a look at it. But this is in essence what works out, right? Now, in terms of real estate, buy and hold works out exactly the same, right? They are going to be fluctuations in the market. There are going to be changes in the market because of many reasons, right? Years ago, it was Hurricane Candy. Years ago, ago, it was the real estate crash back in 2008, and now is the coronavirus. It's all about you adjusting to what's going on. But that's not to say that the only time to invest is when things are doing poorly, when things are going badly, right? So let's say, for example, when we have a thriving economy, what some call the bull market, right? Then it's time for you to apply a different investing strategy in real estate. This is when the flippers start coming in, right? Because they're taking advantage of the appreciation of their properties. They're taking advantage of the price going up. So if they buy a property, let's say in January, and they flip it, they fix it, they make it look really pretty, then 6 months down the road, 7 months down the road, then you have this opportunity to make up for a great profit because you are flipping a property. It is a lot of work, but then you flip a property and you get a one lump sum profit out of it. Same thing applies for Airbnb. If the economy is doing well and you're doing Airbnb, what happens when the interest rates goes up? Everything is incentivized to go up as well, right? That means rents are going up, which means you're going to make more money in rent. That means you get to charge more in Airbnb because now everyone is traveling, the prices are going up, and everyone feels confident about the economy because the Fed decided to raise the interest rates, and now people feel that the economy is doing well and therefore money is coming, and they feel, open about spending a little bit money on things that are luxurious or perhaps a nice vacation, as opposed to wanting to hold back during a recession. And funny enough, all of this analysis, I actually did that during my life. And March 8th, I actually talked about this with my students in a way. I sort of like predicted what was going to happen. We talked about the impact of the coronavirus and how they should be on the lookout for what's going on in the market. But I never expected that it was going to happen immediately the day after. This is just insane. Like I never thought it was going to happen so quick, but now it's happening. And my students were asking so many questions left and right. And I figure if my students are asking these questions, most likely my subscribers and my YouTube channel are probably asking the same thing as well. And that's why I decided to create this. So this is very, very interesting. I was doing the analysis and immediately it happened the day after. So I decided to create this video just for you to help you put one and one together and to always look at the positive side of things. Even in times of crisis, there's always an opportunity for you to invest and make money out of it. And for those who are actually curious and they're wondering, oh my God, how does she do it? How does she stay on top of everything, all the news? This is how I do it. So I receive a bulletin called the Morning Brew, and it's actually free of charge. You guys are more than welcome to join the bulletin. And it basically, at least in my opinion, it tells me everything I need to know. They sent me exactly what I need to know about Wall Street, and they also sent me exactly what I need to know about technology, about Silicon Valley, so that way I can stay on top of everything, right? And this is basically how it looks. The only thing about the Morning Brew is that because it's a news bulletin, you won't receive the news until the day after. So for example, everything I just shared with you guys today took place on March 9th. And so what happens is that the Morning Brew team, they need to sit down together, gather all of the evidence, all of the news, all of the articles that are necessary, and then they package that together. So if you're not in a rush like me and you don't mind waiting an extra day, then you'll get everything, because to me, this is a lifetime saver. It does save me a lot of time. It saves me from having to scroll through all articles and all newspapers that I read. So everything that's in here, right? It talks about, once again, the US market, and then what happened, and the circuit breaker. So pretty much everything I just announced you guys today, it's all in one place. So feel free to join. I'm going to leave you the link down in the description below, and feel free to check it out. It's free. And this is the kind of information my students and I go over every time we meet in the mentorship program. Every time we have a live, we do trend analysis, we make studies, and basically understand what's going on in the market impacts you and how you can actually adjust yourself, because once again, it's all about education, how you can actually protect yourself from the changes that are happening in the market. So for that reason, I created a webinar free of charge, and all you're going to do is just to log on here, right here. Or another option is for you to go down to the description box below where you can find the link, and you just simply sign up for the webinar. All I'm asking you to do is to reserve, or at least block out, 2.5 hours of your time. I know it sounds long, but believe me, it's gonna fly by. So you can learn everything there is about real estate investment. Make sure you have a pen and paper ready. I have read messages from a lot of people who didn't think they were gonna learn something, and by the time they went ahead and wanted to take notes, because their ink actually ran out. So please don't let that be you. And until then, I will see you at the webinar. Enjoy. Happy learning. Bye-bye.